Hello and welcome to this weekly Outlook video at xm.com. I'm Maria Pachartis, and joining me is investment analyst Marios Hadjikyriacos. We'll be reviewing the week ahead. So Marios, the main event for markets next week will be the trade talks between the US and China, which are set to begin on Thursday. Now, investors are hoping that the two sides can strike an interim deal, which would involve China buying agricultural products from the US in exchange for the US postponing its tariffs. What do you think the likelihood of such a deal is, and how will it affect markets?
That's actually a really tricky question. So I think that it's almost too close to call whether or not we'll have a deal next week. If I had to choose, I would go for no deal, but it's a really, really close call. And here are the arguments. So from the US perspective, the US economy is weakening. We've recently seen some manufacturing surveys, indicate that the sector is in contraction. We've seen something similar from the services sector, so it's not in contraction yet, but it's really struggling, and it's really evident that the overall economy is slowing down. Now, if we look at this from Trump's eyes, you also have an election coming up next year. So if you allow the economy to continue to weaken heading into the election, that probably diminishes your chances for re-election. So who knows, you might even be in an actual recession next year if you continue playing this game. So you really want to avoid that outcome. Now, from China's side, the arguments are pretty similar. The Chinese economy is slowing down, and if you do strike a trade deal right now, that also buys you some time as well to wait until the US elections and see, is Trump going to be re-elected? If he's not, that means you are negotiating with a Democrat next year, and the overall negotiations might be easier, or they might not be as aggressive and so on. So both sides have a real incentive to strike a deal right now. Now, there are arguments against the deal as well, though, and pretty strong arguments. So the main one is, if you are Trump, your whole strategy so far against China has been maximum pressure. Every time that China has retaliated to your tariffs, you've doubled up on the stakes, you've introduced more tariffs, upped the rhetoric, and so on. Now, if you do a limited deal now, that negates your entire strategy, really. It allows China to step back, it gives some relief to its economy, and at least in my mind, if you do a limited deal, it decreases the chances for a real deal, right? So I think that negotiators like Lighthizer in the US know this, and I think they will try to avoid this outcome. The question essentially is, do you want some short-term economic relief that might undermine your longer-term negotiating efforts? I think the answer is no, but it's a close call. Now, if we see no deal, the effects in the markets would probably be a risk aversion. So stocks would likely head lower, the yen would likely, and safe havens like the yen would likely, and gold would likely head higher. On the contrary, if we do see a deal, we're likely to see the opposite market reactions. Higher stocks, lower safe havens.
Right, I see. So turning now to US inflation data. CPI readings for September are due out on Thursday. What can we expect to see there?
So the forecasts are for both the headline and the core CPI rates to hold steady. I think that those are overly optimistic forecasts. I think that if we do see any surprise, it will most likely be a disappointment. And I base that on the market services PMI for the month. It showed that service providers had to offer discounts and had to decrease their prices on some occasions. So, I think that there's more likely to be a negative surprise than an upside one in this data. If that is the case, that would argue for the Fed to cut rates definitely in October, and that could hurt the dollar. But the bigger outlook for the Fed and the dollar rests on what happens in the trade war.
Okay, and so is there anything else to look out for next week?
Actually, there is. We get employment data out of Canada on Friday, but before that, we will get the GDP data for August out of the UK. Now, let's talk about the pound a little bit. It's been a very exciting week. Prime Minister Johnson gave his ultimatum to the EU. Here's my offer, take it or leave it. Now, right now, the EU replied, this is not as much as we would like, so you have to make us a counter offer. So it's all up in the air. The outlook for the pound, I think, is still green, and for that to really change, we would probably need to see a general election.
Marios, thanks so much for joining me, and thanks for watching at xm.com.